What's up, everyone? Happy Friday, March 13th. I just want to give you a quick update. There's a whole bunch of things going on in the market. Obviously, the stock market's doing crazy stuff this last week. Interest rates have been all over the place. The Spokane housing market's in its spring market. Things are just kind of off the wall. So I want to kind of do this quick video just to walk through a bunch of these things, kind of some different ways to think about some of the changes that are taking place, both locally and nationally, and just give you an update on that. So for those of you who don't know me, my name is Chase. I am a real estate agent at the Baxter Home Team under John L. Scott. And this is Derek, our buyer specialist. So Derek, what are some of the things that you've been seeing in the Spokane market the last couple of weeks as you've been working with some different buyers?
Yeah, well, like you just said, it is the spring market. So right now, spring market, inventory is limited. There are a lot of buyers, and so pretty much every home that's listed is getting multiple offers, which is the typical spring market.
Yeah, it's been absolutely wild. So this week, a lot of things have been changing nationally. So I wanted to dip in real quick to the stock market. For those of you who aren't really aware of how the stock market works, I'm going to post a link to another YouTube video below, which is just kind of a stock market 101, kind of how it works. But quick on that, so here is a supply and demand curve. So this is price on this side. This is demand, and then this is supply. This is quality. Essentially, what that would mean is if a company is forced to increase supply radically, often quality is going to go down. So with the stock market, that's not really a super relevant thing. But the last couple years, the demand for stocks has been going up and up. So as it's been going up and up and up, the prices have risen the last couple years. So you heard, more like 2 weeks ago, stock market was at an all-time high. That's because the demand has been going up. More people are buying stocks, trying to invest in the market, and so the price has gone up. So previously the price was here. Now it has gone up to here as of a couple weeks ago. And then this last week, that's when things started to kind of fall off. So what happened was a bunch of investors, partially because of the coronavirus, partially just because it's we're in a 10-year cycle often for investments. We're in that 10th year, so I think investors are generally a little bit jumpier than they normally would have been. But with the spread of the coronavirus, which has obviously been all over the media, all over everything you can imagine for the last couple weeks, investors are worried that consumers are going to stop spending money in the market. So what that would mean is, cool, so I'm a runner, that's something I love doing. So if, let's say, Nike's a good example, it's one everyone knows about. So if I'm a healthy person, I am I don't have coronavirus, I'm going to go to Nike, out shopping, I'm going to buy some shoes, a shirt, and then I'm going to go put those on, I'm going to go run. So the investor who has purchased stock in Nike is counting on me to go buy Nikes so then they can make money on their stocks. So what's happening is if I get the coronavirus, I'm not going to feel healthy enough to go out to go buy those Nikes, or if I'm scared that someone else will give me the coronavirus, I'm not going to go buy those Nikes. So suddenly the money that I would have spent there is not being spent, so the investor is not making money. So they're going to pull their money out of the market because they're assuming that consumers are going to stop buying things and they're not going to make money on their investment. So what happened is the demand for the stocks has actually decreased significantly to this lower point. So rather than going up like it has been for a couple years, it has dropped very significantly to here, which is why we are seeing prices on stocks at just incredibly low rates. So first of all, if you're looking to invest in the stock market, I know some great financial planners. I'm going to be investing and am actively working on that during this low market. They always say buy low, sell high. We're in a time where it is down significantly, and depending on what happens nationally with Donald Trump and whether he does a state of emergency or different things like that, that's going to affect the market even further. And it's a really good time to kind of be aware of, hey, how can I start to invest some money into the stock market and make some money in the long run? So use something that is nationally seems to be a very negative thing, something that's very polarizing, to actually hopefully make some profit on that to better suit yourself and your families. So that's all the national market. So what has happened in Spokane is kind of a unique event. So Spokane has almost inconsequentially been hit with the coronavirus so far. So we've had very, very few cases. Generally, I think people are still out and about. Schools haven't been closed. There's no state of quarantine as of yet today. We'll find out if it changes tomorrow or this weekend or whatever. But as of this point, the Spokane housing market has not seen much of a change. So the last couple years, the demand has been going up for homes in Spokane. We have about 10,000 people moving here every year, and the supply has been going down. So less people are wanting to move because they realize they love the city. More people are wanting to move here. So we're at this heightened place of supply and demand where demand is high, supply is low, and so prices have been continually, steadily going up. So as more people move to Spokane, naturally there's going to be higher demand, and we're going to see increasing prices all around in the housing market. So that's going to affect both housing prices and rental prices. So that is just the natural economics of what is happening in our city in the housing market. So how does that affect with the stock market? So Spokane is unique in the sense that we are not dependent on much imports, exports, large production, things like that. So our three largest employers are the Air Force Base, the hospital system, and Avista Utilities. So if the market crashes, people are still going to need their electricity and their gas. People are still going to get sick and go to the hospitals, and the Air Force Base is going to continue to grow to protect our country. So the Air Force Base is slated to almost double in the next couple of years. So those people are moving here. The base isn't going anywhere. So with those things holding up our economy, Spokane becomes a very, very safe, steady place to assume that there's going to be growth taking place. So if there's a national crisis, which is currently happening, Spokane is likely not going to be affected. That being said, with this huge outbreak of the coronavirus, that's throwing a little bit of a wrench into some certain things. So one way that can affect people is if it becomes widespread in Spokane, there's going to be significantly less buyers in the next couple of weeks who are looking to purchase homes. So prices will be going from here down to here. So if you are out there, you're thinking, hey, I'm considering buying a house sometime this year, maybe early next year, there's going to be a couple week window, most likely, where coronavirus is going to spread to Spokane. A bunch of people are going to get sick, and that is likely coming. So let's be ready for it and be ready with, hey, if this happens and a bunch of people decide, hey, I don't want to go out, maybe there's a quarantine or whatever else for people, and you decide, hey, I'm willing to take this time right now and use this as an opportunity to get into a home, you could find yourself in a market that is very busy, having no competition. So if you've even thought about, hey, maybe this is the time, let's talk to a lender, let's get you set up on a path for success. If this doesn't happen, I'm hoping no one gets sick in Spokane. That'd be awesome. That's definitely my hope. But if this does happen, let's be ready for it. Let's talk now so that in 2 to 3 weeks, if this comes to Spokane, you'll be ready to jump on something and buy. So that's the first thing. As a home buyer, let's be very aware of what the market is doing and see if this is maybe kind of that unique couple week window where you can jump on something. As a seller, it is always very important to protect yourself and to protect your family. So if you're thinking of selling, you're like, okay, cool, I'm going to wait until this coronavirus thing is done and gone before I sell my home. Because I don't want people walking through that are sick. I don't want all these different things going on. So a big piece of that is how we market your home. So with today's technology, it is really easy to market your home without people ever stepping foot inside. So for example, if everyone is sick and they're at home, they're on their phones, they're scrolling through Facebook, they're on Instagram, watching Netflix. So that's what I do. But people are going to be digitally shopping for homes and getting ready for, hey, when I get healthy, that's the next thing I'm doing. So they're going to be looking online. So at the Baxter Home Team, one of the things we really highly utilize is technology. So we do video walkthroughs. We do aerial drone photography of the neighborhood. We really try and capture your home in all of its different angles. So a prospective buyer will actually feel completely comfortable buying your home without ever stepping foot inside. So some of the things that we can do in light of this coronavirus kind of epidemic that's been going on is be aware of, hey, let's actually market your home really well when people are at home on their phones anyway and considering buying them. So with the video walkthroughs, things like that, we can also ensure that no buyer steps foot into your home unless they've already seen the video and they're very legitimate buyers. So if you're buying your home, you don't want a bunch of people walking through that have no real interest in the property. There's terrible pictures online, so they come in to see what it's about and then find out they don't like it. So let's make sure that you as a seller feel comfortable with the people that are walking into your home, and only the people that really want to be there will be there. So that's a big piece of that technology and that representation piece that we do for sellers is make sure that you're going to get the right people walking through your home at the right time. And let's, again, as a seller, begin to capitalize on this, be aware of these supply and demands, and as things shift and change, really try and get a jump on what the market is doing. Finally, for homeowners, rates are super low right now. So I don't get paid or commission or anything on if you refinance. But right now is a really good time to save a lot of money on your home. So rates right now are 3.5, 3.75. I am in the process of refinancing at 3.375. I've heard of rates earlier this week that were as low as 2.875. So rates are low right now. They're historically low. Assuming the market continues to kind of topple downward, the 10-year Treasury bond is going to continue to follow that, and rates are going to continue to drop as well. So on Monday this last week, there's kind of a shift where the market went down and rates started to climb a little bit. Traditionally, they sort of follow the same path. But what happened was a bunch of money was shifted around essentially, and a bunch of people saw these low rates, so they refinanced. And so that kind of boosted interest rates for a few days. So what we're looking at now is if the market continues to decline, we're going to have just incredibly low rates. So what a good lender is able to do is they're able to get you set up on sort of a ticker to be aware of, hey, when rates drop to this point, lock my rate. Because this is when I'm going to start saving money. So if you have any thought on refinancing, I'd love to talk to you about that. See if we can save you some money. These super low rates are probably going to come next week or the week after. So a lot of economists are expecting they'll be in the very low 3s or high 2s, which is the lowest it's pretty much ever been. So if you are considering refinancing, I would love to chat with you about that. Obviously, it's depending on credit, different things like that, but rates are really good and looking like they're going to be even better in the next 2 weeks. So, Derek, anything else you want to add to that?
Yeah, you know what? I'm going to go back to the sellers for a second because they might see as demand starts to go down, like price point might seem like it's going to drop, but the market in Spokane has been growing a ton, over 11% last year. And so I would just say, like, don't be afraid to still look at selling because there's still probably value in your home.
Mm-hmm. And on top of that, there's a lot of people moving here that maybe we're going to buy your house and never see it anyway. So if people are stuck at home, there's still a really, really good opportunity to sell your home for top dollar, even in the midst of some sort of quarantine or whatever else that may look like. So yeah, that's a super good point.
Yeah. Otherwise, I got nothing else. If you guys have any questions or comments, please feel free to leave them below. And we'll see you again soon.
Cool. Thanks a lot, guys. Appreciate it. Thanks again for letting us help you find home.